Hello, my viewers. My name is Deji, and I'm your life coach. I am committed to helping you build a stronger financial future. So every Monday at 10 a.m. Central Time, I drop a brand new video on personal finance. This will be covering everything from saving smarter to investing like a pro. There is so much to gain from this channel. So come with open mind and a willing heart. Be ready to learn and don't keep it to yourself. Share this insight with your friends, your family, even your co-workers. So let's grow together. That's the way to go. And don't miss out on the special message from our sponsor at the end of all my videos. There is an opportunity for you to win a grant between $5,000 to $15,000. This is real. It's life-changing. Take full advantage of this opportunity and make sure you let your loved ones know about it too. So let's get started. Today, we are diving into a major new tax proposal just introduced in May 2025 that could dramatically affect how much you owe or get back when you file tax in 2026 and beyond. We are talking bigger refunds, larger tax credit, and a potential permanent extension of the Trump era Tax Court and Job Act. But there is a catch to it. Let's break it down. No politics, it's just fact, so you can understand what's coming, who benefits, and how to prepare before the headlines get twisted again. So what are we talking about? On the 9th of May 2025, right, the House Ways and Means Committee, they roll out a sweeping new tax bill. While it doesn't have a formal name yet, it's already been called One Big Beautiful Bill by President Trump and others in Washington. The goal is to extend and enhance key provisions of the 2017 Tax Court and Job Act, which are scheduled to expire in 2025, from standard deduction and child tax credit to estate tax exemptions, business taxes break, and the SALT deduction cap. This bill could shake up nearly every corner of tax code. This is very important. That's why we all have to pay attention to this. So standard deduction charges, right? Let's start with something that affects almost every American taxpayer, the standard deduction, right? Without new legislation, the standard deduction is set to shrink dramatically in 2026. Here is the current setup from the 2017 Trump tax court. $15,000 for single filers, $22,500 for heads of household, $30,000 for married couple filing jointly. But these numbers will drop, okay, unless extended. Estimated for 2026 without action, $8,000 for single filers, $12,000 for head of household, and $16,000 to $18,000 for married filing jointly. That means more of your income become taxable and your tax bill goes up, right? The new 2025 GOP tax bill proposes making current standard deduction permanent, no expiration in 2026, temporary boost from 2025 to 2028, plus $1,500 for single and head of household, $3,000 for married couple filing jointly. That will mean that $16,500 for singles, $24,000 for heads of household, right, and $33,000 for married couple filing jointly. Bottom line is this: you get short-term tax relief and long-term protection from a tax hike. So when it comes to the child tax credit, right, there's an increase. So up next, the child tax credit right now it's $2,000 per qualifying child and hasn't changed since 2017, but it's not indexed for inflation, right? So that means its value erodes over time. Under the proposed 2025 GOP tax bill from 2025 to 2028, the CTC increased to $2,500 per child, In 2029, it returns to $2,000. But it would finally be indexed to inflation, increasing over time to match the cost of living. Importantly here, the rule will still require your child to have a valid social security number. No change there. There's no change in that. For families with multiple children, the extra $500 per child could add up fast. And indexing means long-term value protection, right? So, what does that mean? So switching back to traditional taxes, let's talk about a steely tax increase most people don't see coming in the bracket, right? Federal tax bracket are adjusted annually using change CIP, a slower inflation metrics that assume you change your behavior when price goes up. Okay, like switching from steak to chicken, that's just an illustration. The problem, your income might keep pace with inflation, but under change CIP, you will have to rush. That means you pay more taxes, even though your purchasing power hasn't really increased, right? This new bill proposed switching back to traditional CPI, which better reflects real-world inflation and helps prevent automatic tax hike on middle classes earners. Okay, so what about estate and gift tax, right, exemptions? If you are planning to pass wealth to your family or do legacy planning, this next change is massive. So you have to pay attention to this. The current federal, state, and gift tax exemption is 13.9 million per person. 2025. The proposal will increase it to 15 million per person. So makes it permanent instead of reverting back to 2025. Index it to inflation going forward. This also applies to generations skipping transfer tax, which is the GST, right? So you can give to grandchildren or future generation without triggering that extra 40% tax. Okay, let's come to business tax now. So business tax breaks and corporates and corporations. Small business owners, this is for you. So pay attention to this. The 2025 GOP bills would make 20% pass-through deduction permanent for LLCs, S-corps, and partnership, or lock in the lower 21 corporate tax rate down from 35 pre-2017. This could have a huge impact on industries like real estate, healthcare, law, consulting, e-commerce, and more. These changes help small and mid-sized businesses retain more earnings, reinvest in growth, or increase employee wages. So let's talk about the SALT deduction cap increase. If you are in a high tax state, pay attention to this one, right? The SALT deduction, states and local tax have been capped at $10,000 since 2018, regardless of how much you actually pay in property or state income taxes. The new bill would raise the cap to $30,000 starting from 2026. Example, if you pay $24,000 in SALT today, you can only deduct $10,000 under this bill. You could deduct the full $24,000, but only if you itemize the deduction. Heads up, the change mainly benefits high income earners and homeowners in the state like California, New York, and Illinois. So, if in that area, that affects you more. So what's the downside? The bill is protected to reduce federal tax revenue by 4.9 trillion over 10 years to affect these lawmakers, right? There are floated potential cuts in Medicaid, renewable energy incentives, and other social programs. These cuts are not in the bill, but they are being discussed as potential trade-off to stay budget neutral, right? Critics argue that some low-income families may see minimal benefit. The bill could widen the federal deficit also. Such changes mostly help high earners. So in conclusion, here is what to the 2025 GOP tax proposal offer. Bigger standard deduction. So this is temporary and also on the long term too. A higher and inflation-proof tax credit for children, more favorable inflation adjustment to tax bracket, larger estate tax exemption for legacy planning, continued business and corporate tax break, higher SALT deduction cap for itemizers. It is a big, beautiful tax break or short-term boost for long-term consequence. It depends on you, okay, on your income. So your income level, your family size, where you live, whether you itemize or take the standard deduction, and how much weight you put in on your national debt or federal program. So drop your thought here on my comment. I would like to hear from you about this bill. What difference do you expect it to make in your life? If you learned something from today, give this video a like. Follow me on all my social media platforms. Remember to subscribe and also share this with your loved ones. Let them know about what is coming. It's already here. So we all have to be prepared. We all have to be informed. So thank you for watching my video. Till I come your way next time. See you again.
As a woman with a vision, I know how crucial it is to have the right support to elevate my aspirations. That's why I'm excited about the Women's Empowerment Grant. This quarterly opportunity offers grants between $5,000 and $15,000, empowering women like me to turn our dreams into reality. Whether I'm launching a startup, furthering my education, or leading a community initiative, this grant fuels my journey. Applications are open year-round, with quarterly reviews to select inspiring women. This is my chance to make a difference. The application process is ongoing, and I'm excited to be part of a community of inspiring women. This is my chance to fuel my journey and make a real impact. I'm applying now because my vision deserves to thrive. Visit the website to learn more and join me in this empowering journey.